The higher time frame box strategy is a strategy built on the edges of ranges from any of the following chart time frames: the weekly, the daily, and the 60-minute. Using these higher time frames, we can ensure more eyes and involvement from market participants, which can prime a setup with larger moves. Whether you categorize yourself as a breakout trader or reversal trader, this strategy can suit both types of trading styles. The higher time frame strategy focuses on two key levels placed at the extremes, one level at the top of the range or box and one at the bottom. Focusing our attention at only these two locations can keep us from entering inside the range, or what we call the chop zone, where price action can become messy. To find this setup, we need two key items: a clear range, box, or zone on the weekly, daily, or 60-minute chart, and a Camarilla pivot that aligns with the edge of the box, or in other words, one of our key levels. Note that we want to draw our box and choose our levels before looking at the pivots. This helps to prevent bias in forcing a pivot to align with a level. We want to choose our level and then trade it on a day when a Camarilla pivot aligns with it. When one of these ranges on the higher time frame is found, it can be in play multiple times over the course of a week, sometimes even multiple times during the intraday session. Take this example on NVIDIA. Notice the box drawn here on the daily chart. We can see a top side located around 280 and a bottom side located around 262. On these 2 days here, NVIDIA broke out and had a $10 and $7 move away from the level. On both of these days, a Camarilla pivot was aligned or near these levels. On this day, the pivot was R3, and on this day, the pivot was R4. On the second day that this broke out, we had a higher time frame range level, 280, a pivot, R4, and a break of this daily pullback here. So along with levels and pivots, we also had good chart structure for a breakout. Let's go ahead and take a look at this trade on May 5th, the second day that it broke out. Here we have the 5-minute chart queued up. You can see our level from the top of our range at 280 marked here, and the R4 Camarilla pivot marked here at 280.49. When price gets to these levels, we are typically open to both a reversal or a breakout, depending on how it interacts with the level. However, we know from looking at the daily chart that the break of a pullback has just occurred, so we are more interested in a breakout. As price approaches these levels, you may feel inclined to jump in early, but wait, allow the stock to interact with them first. Notice the volume as price is moving up and pulling back. It has strong volume on the push and low volume on the pullback. This is a good signal that the stock is strong. We do not want to attempt to reverse this. As price approaches the level, let's pause this for a moment and discuss our stop. Since we are playing the higher time frame levels, we are expecting a larger move. Therefore, our stop can be slightly wider than it would be if we were playing a 1, 2, or 5-minute level. The stop for this strategy is based on 10% of the stock's 14-day ATR, or average true range. Using tradingterminal.com on this day, we could see that the 14-day ATR of NVIDIA was $9. Based on this information, we can calculate our stop loss. 10% of $9 is 90 cents, or roughly $1 for easy math purposes. This wider stop allows the stock to breathe and move around the level without stopping you out a bunch of times while it gets going. Now let's switch over to a 1-minute chart to see what's happening inside the trade as we get closer to the level. Once NVIDIA begins to break the level, notice the volume increasing. We can enter into our position and place our stop at the 10% ATR area. In this case, our stop would be at 279. Again, this wide stop will save us if NVIDIA rejects R4 or the 280 level slightly during a pullback. You can see how the price action pulled back and wicked below the level. Our wide stop has saved us in this scenario. Since we are playing the higher time frame, once we are in a position, we will be looking for key levels of resistance from the 60-minute chart, along with any Camarilla pivots. Take a look at the 60-minute chart. We can see a resistance point in this area here, and in this area here. These will be our target areas. Notice how we say areas. When dealing with the higher time frame, it is important to look at target points as areas and see how price responds as it approaches them. The point at which the price reacts may be a few cents below or above the level you have marked, so pay attention to the price action. R6 is also sitting in the 283.60 area. so we definitely want to take a partial here, being that it is both a 60-minute resistance area and a Camarilla pivot point. In other words, using the same strategy we used to enter the position, a key level paired with a pivot, to also help us with taking partials. We can then carry our position until one of the following occurs. The final resistance target is reached, the stock reaches its full ATR for the day, or the intraday trend is broken. This strategy is a great strategy for training our eyes to see the bigger picture and practicing to hold for larger moves. You can try this and other strategies in the replay simulator by visiting tradingterminal.com.